Hey everyone, Siam here. Getting a lot of questions with cryptos, which is quite understandable. So I thought I'd put some videos or thoughts to video, and I'm going to speak as fast as I can because this could take a while. Annoyingly, I spent about 45 minutes putting all my little annotations on the charts. I pressed record, and then the whole computer crashed, and TradingView did not save anything. So I've tried to save it here. I'm saving it like all the freaking time. So fingers crossed. Right. So, long story short, what I'm about to show you is a type of analysis which I absolutely hate. I hate it with a passion, and basically it's using hindsight. So you're using historical biases basically, and it's basically looking in the past for patterns that repeat themselves, etc. And I really don't like it, because for every pattern that you can show me in Bitcoin, I can pretty much show you an equal amount of occasions where something doesn't happen. So what you tend to see when you're looking at YouTube or Twitter is someone that stumbles across a pattern, and then they will try and project that pattern to the future. And the thing is, with technical analysis or with indicators or anything like that, you can make anything show any reasoning or a thesis that you wish, basically. So you have to bear what I've just said with them, into the back of your skull. So whenever you're seeing videos like this, just be very careful. So what I thought I'd do is give my own do a whole bunch of bullshit analysis myself. Just so you can put this up there with whatever other people you're following with, because perspective is quite interesting. And if you see a whole bunch of different people that know what they're doing saying the same thing or different things, then anyway, enough with the massive disclaimer. So in my opinion, again, this is my opinion using this little just having a little gander here, there have really been three proper Bitcoin bear markets. Okay, so we had the first one around to the 2013, then we had the 2014 to 2017 one, and then we're in the one we're in right now. And I'm going to explain what all these markings are. So what these blue vertical lines are basically from sort of peak to peak between markets. And what we see in the run up to a bear market, we have these little orange boxes. Now these orange boxes are measuring the height of a retrace or a pullback within a strong bull market. So from peak to trough, and the point where it gets back to break even again. Okay, so here we're in the run up to a big blow off top, 50% drawdown, and again another 56% drawdown. Here's another one. If we zoom in, 32%, and then we have another one, 33%. So you see this a lot when in the middle of a strong bull market. Now, just so you know, this chart that we're seeing here is a logarithmic chart. So anything you're looking at that has exponential characteristics, you have to look at it with a log chart, not a regular price. So on TradingView, you right click on the price and put it to a log, and it gives you a much more balanced picture. So what happens is that we get to the next blow off top, and then we see the first proper bear market that Bitcoin's really seen. And so here it lasted about 209 days. So as you can see, this box is from peak back to break even, and also the lows. And you see the low is actually a wick all the way down here. So it's an 81% drop, which is interesting. So what we're going to do is zoom into this box a little bit more. And what you will find is when we're in a proper bear market, you will see, and when I say the bear market, up until the point where it gets back to break even from the all-time high, you'll also see two pretty sharp mini crashes within it towards the end. But before we get to this, just have a look at this. So here we have obviously the first big pump off, or the dump, so to speak, and then the market resumes bounces a little bit, and you have a low here, and then you have what I call the a massive bull trap, followed by a big baby seal clubbing session over here. And so from this low to this sort of mini fake rally, you had a 60% growth, and then it fell through, everyone got clubbed, and you had a minus 51% drop. But along the way you have little bounces, okay? And so you have this little low here, and then from that low to that low is 30%. So just bear that in mind for the moment. Then you have the ultimate bottom, or the proper bottom, after the seal club, or basically after all the mooners have got wrecked, and then you start the gradual climb. And during this, just as it's really getting into flow, you have a few of these massive sell-offs. So you have a 37% one here, 24%, and then you're out of bear season, really, or let's be more correct, you've breached all-time highs. And then what happens is you have a few of these I guess sell-offs between bear markets, okay? So here we have 25%, here's a 50% one, and this is actually where you see a lot of overt manipulation. So this is where probably most likely, the big boys are accumulating in these places here, okay? So that's why you see these markets here, and that's why, look at this, massive sell-off, big boys, Goldman Sachs, banks, whatever, or whales, they're just manipulating it so they get a good feel for themselves. Again, another big one-off wick. Over here you have more manipulation, but I guess the smaller whales. Don't forget you have many different types of whales. So I guess here you have some, the late Johnny-come-lately whales going, oh shit, we need to get our fill. And also this is where the retail comes in as well. So don't forget, this is where the mass market starts piling in, okay? Because what happens is once you've breached all-time highs, guess what the newspapers do? Yeehaw, baby. Then you enter the next all-time, so then you enter the next bear market. So what we have here is we have, just like we've seen here with basically a bull trap followed by a clubbing session. Here we have the same, but on a longer scale. So this bear market was a lot longer. It's a couple of years. But we had here, in this instance, 100% growth, where everyone was going, hey, we're going to the moon, because it went from sort of 300 to 600-ish. Then you had a 77% drop, all the way down to this point here. Over here it was 51%, here is 77%, and then you had a 44% drop from this point to this point, okay? So that's the first sort of like-for-like-ish. Again, technical analysis or stuff like this is so subjective. I mean, why have I picked this one? You could have picked this one, but the reason being is this one is where the market took out a previous low, and you'll see why I've used that later. So then we have the V reversal and the all-time low within the bear market, and then it starts its slow trug up. Very similar to this one. This was a bit more aggressive because it was shorter. But guess what? Towards the end of the bear market, you see these two red ones here? You have pretty much the same over here. We have more contraction, big sell-off, and then another sort of sell-off. And then you get to the point where you've hit break even again from that all-time high. And then you have the retail coming in, again more compressionary events and big sell-offs, so another 32, 40, 40, 30. It's very similar to what we're seeing over here for 50, that's pretty much 50, 56, 30, 30-ish. So you're seeing the retail coming in and getting screwed left, right and centre. Again, banks are doing all of this, or whales. Then you enter another bear market. So here we had, I guess as I normally talk about the skipping stone. When you're looking at support and resistance, it's like a skipping stone. So if you imagine that is the water, you have the pebble goes, you have the most kinetic energy, the biggest bounce with the first one, skip, 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 plop. And that's what happened with Bitcoin there. And then you had the sell-off. So this is the low breaching previous lows, similar to what we saw here. So this low is what breaching these, and then you had 100% growth oh no, sorry, that hasn't saved from where I wanted it. So it's actually about 170% growth if you look from here to here, 166. So let's just change this. 166% growth. Whoopsie. Yeah. So very similar. Everyone at the moment is going moon, and I'm still on the sidelines. I'm still in fiat. I'm not in cryptos at the moment, and this could happen. So all I've done is I've basically copied the price action from here onwards, and that is what you see. All of this here. This is just a like for like. So again, the 44% drop from there to there, 70%-ish drop from there. And then again, without editing the scale as well, you don't really need to with a log chart here. You then have the two red manipulations before you hit the break-even bit, and then the rally up to the next all-time high. And looking at the same sort of percentage growth, you're looking at sort of the high hitting about $280,000. Again, when? No idea. Sometime before 2025. But yeah. But as I said, this is all massive speculation and hearsay. But for me personally, I've said before, every trading bone in my body thinks this is just this is really lulling everyone into a false sense of security. What's happened recently, and we're hovering around $7,500–8,000 right now. So yeah, I'm waiting for another pullback. And for me, what I've said again for ages, I'm waiting for this one here. This one here, I'm going to get most of it in, because this bit may not happen. It didn't happen in previous ones, or it did, but it's tough. This comes very fast. From here to here is normally very fast. And so yeah, that's just my take. But again, I'm about to make another video, which I may just bolt on to the end of this video, because when you look at all of this from a completely different perspective, when you add in one more variable, it sort of changes the picture. Okay, so what I'm going to do, I'm going to stop the video here and then edit, bolt on the next video once I've wiped all of this. Okay, toodles. Okay, so I've done a bit of doodling, and here's another take on things. Okay, so what I'm about to say contradicts a fair bit of what I've said over the last 12 minutes. So this is why different perspectives are crucial. So before I said that we've had three big or three proper crashes. Okay, and I marked basically the end of the previous crash to the previous crash, but they're not set in stone, you see. So with what I've just said over the last 12 minutes or so, the end times were different because each bear market lasted longer than the other. The only real constant we have with Bitcoin is the halving. So if you type in Bitcoin halving, you'll see all sorts of different calculators, but basically every 4 years Bitcoin's block reward halves. So at the moment it started 50, then on the 28th, if I can just squidge this to the 28th. No, I've just moved it completely. Basically on the 28th of November, close enough. We had the first halving down to 25 Bitcoin per block reward, so for every 10 minutes. Then it went down to 12.5, where we are now, and the next one we're having is around the 20th of May 2020, where it goes down to 6.25. Now, when you're looking at it with this perspective, you have, I guess, three phases with each between each halvings. So you have sort of the early crash, the mid crash, and then the late run up to the halving. And then what you see, so that's, and then directly after the halving, you normally see a rally into the first crash. Okay, so here we have the rally into the first crash, then the mid crash, and then I guess what we can call this is the recovery, because it doesn't, normally go to all-time highs, etc. Well, we say normally. All we have is basically the last 2 halvings. So again, from a statistical point of view, this is an insignificant data set or data sample or sample set. So again, this is why I hate this type of analysis, which is what all of YouTube does. But yeah, looking at this through this lens, you can see directly after the halving, market rallies, first crash, mid crash, recovery. Then we have the halving, starts another rally, crazy rally. Here you had the first crashes. Is a bit suspect here. I mean, the first 2 early ones were quite significant. 80%, this one was about 80%. Here, there's no real proper first crash. You have one here. Whoopsie daisy. Oh, you got to be shitting me. I do have a pro account, and if I log in, it's probably gonna. Oh, sweet. I thought I was gonna lose everything again. Yeah. So this one, there wasn't a proper crash, so this is where it falls down a little bit. You have the mid crash again, very similar. Again, not very similar over here. And then with the recovery. Now, this is where you're guessing. Where is the recovery going to end? Is it going to be at all-time highs, or is it going to be slightly lower, just like it was here? Whereas over here, we were just below all-time highs. So I've put the box around here, and then I've basically copied the price action from this halving to this halving and just superimposed it over here. So there's many question marks, many question marks. This is the next halving, again 4 years plus from that. So will it go up here? Will it again go? I mean, looking at this, we should see sort of mid 2020s, I guess, 22, yeah, 21, before 2022, $1 million Bitcoin. So yeah, I don't know. And then it's basically saying before the next halving, we should be, about $600,000. So again, more patterns that look very lovely, but again, you've got to be so cautious. This is why I'm still on the sidelines. I'm not letting FOMO get to me. Hopefully that makes sense. Toodles.